Hey everyone, welcome back. I'm so ready for this deep dive.
Yeah.
We're going to be looking at gender diversity on corporate boards in Spain.
Oh.
You might be getting ready for a big meeting on this, or maybe you're just curious about what happens when you have more women in leadership. Like, what's the actual impact?
Right.
Either way, we've got some research
Absolutely.
that we're going to unpack that I think is going to kind of blow your mind a little bit.
Really fascinating.
So?
Yeah. We're diving into a 2022 academic paper.
Okay.
From the Journal of Behavioral and Experimental Finance.
Nice. So we're getting into the nitty-gritty here.
Yeah, we are. And what's so interesting about this is that it doesn't just look at the number of women on boards.
Okay.
It looks at how that number impacts the company's performance.
Okay.
And its risk-taking.
Interesting. Okay, so before we get into all the details, can you give us some historical context?
Sure.
I know Spain was actually pretty progressive on this front.
Yeah.
Passed a Gender Equality Act back in 2007.
They were the first ones in Europe to really make a push for this, actually.
Wow.
Aiming for 40% female board representation by 2015.
Right.
They used a comply or explain approach to corporate governance.
Comply or explain?
Specifically through the CNMV code.
CNMV code.
That stands for Comisión Nacional del Mercado de Valores.
Oh.
It's kind of their version of the Securities and Exchange Commission here.
Gotcha. Okay, so if I'm understanding this right, the CNMV sets out these recommendations for companies.
Yeah.
But there aren't actually any penalties for ignoring them.
Yeah, that's basically it. It's more about encouraging companies to consider these recommendations,
Okay.
including that 40% target for women on boards,
Right.
but without strict enforcement.
So it's kind of a suggestion box almost.
Yeah, pretty much.
Okay. Interesting. So knowing that, did they actually hit that 40% target?
Well, no, not quite. By 2021, the Global Gender Gap Report showed female representation on boards in Spain had only reached 26.4%.
So even with this Gender Equality Act in place, they're still lagging behind.
Yeah.
Makes you wonder what factors are at play here.
Yeah. Well, that's one of the things this research is trying to figure out.
Okay.
It examines whether having more women on boards actually leads to changes in how companies perform.
Okay.
Both in terms of their financial results and their risk-taking behavior.
Got it. Okay, let's break that down. First, how did they measure performance in this study? It seems like kind of a broad term.
Right. It can be tough to define, yeah.
Yeah.
But these researchers were really thorough. They looked at both accounting data,
Okay.
like profitability metrics, things like that from the company's financial statements.
Okay.
And they also looked at market data,
Okay.
which reflects investor perceptions.
Gotcha.
Things like stock prices.
Right.
So this gives them a more well-rounded view of performance.
So it's not just about how much money a company's making, it's also about how the market values them.
Exactly.
Interesting. Okay, and then on the risk-taking side, how did they define that?
So for that, they focused on two specific types of risk.
Okay.
They looked at total risk, which is how much a company's performance fluctuates.
Okay.
And they looked at insolvency risk, which is basically the likelihood of them going bankrupt.
Oh, okay. So it's about understanding whether companies with more women on their boards are more likely to take big swings.
Yeah.
Or if they're kind of playing it safe.
Right, exactly. And the findings, they're pretty interesting.
Okay.
They challenge some pretty common assumptions about gender and risk.
I'm very intrigued. What did they find?
Well, when it came to accounting-based performance, companies with more women directors actually performed better.
Oh, wow.
They were consistently more profitable.
So having more women on boards might actually be good for the company's bottom line.
That's what this data suggests, at least from an accounting perspective.
Yep.
However, there's a twist.
Oh?
When you look at market-based performance.
Okay, what happened there?
Companies with more women on boards actually had lower market-based performance. So investors didn't seem to value them as highly.
Wow, that's wild. So there's a disconnect between the actual financial performance and how the market perceives these companies.
Right.
I wonder why that is. Could it be related to how investors view female leadership, do you think?
That's certainly possible. There's a lot of research out there on implicit bias.
Right.
And it's possible that investors, maybe consciously, maybe unconsciously, might be undervaluing companies with more women in leadership positions.
So even if a company is doing really well financially, these kind of outdated perceptions could still have an impact on investors' decisions.
Exactly.
That's something for all of us to think about.
Yeah.
Especially if we're like involved in investing or running businesses.
Absolutely. And then there's the risk-taking side of the equation.
Oh, yeah.
Which might surprise you even more.
Okay, lay it on me. What did they find about risk?
Ready for this? Companies with more women directors actually took on more risk.
Hold on.
Both operational risk in terms of like their day-to-day business decisions and insolvency risk, meaning they were more willing to take chances that could potentially lead to bankruptcy.
Wait, that totally goes against the common stereotype that women are more risk-averse.
It does. This research challenges that assumption head-on. It suggests that women, once they reach these higher levels of leadership, might be just as willing to take risks as their male counterparts. You know, it's not about being reckless, but maybe it's about having a different perspective on risk and reward.
That is fascinating. It really makes you wonder how boardroom dynamics change when you have more women involved. What kind of conversations are they having that are leading to these, like, riskier decisions?
Right. It definitely raises some interesting questions. And what's even more interesting is that these riskier decisions, they seem to be paying off, at least when it comes to profitability.
Okay, so we've got companies with more women on their boards. They're being more profitable, but they're also taking on more risk. And yet, investors aren't fully on board yet.
Right.
There are definitely, like, some layers here to unpack.
There are. And that's what we'll get into in the next part of this deep dive. We'll look at, you know, the potential explanations for these findings and what they mean for companies, investors, and anyone who's interested in building a more, you know, equitable and successful future.
I am so ready.
Yeah.
Let's do it.
What's really interesting is that this research connects these findings back to, like, existing theories about corporate governance and gender dynamics.
Okay.
So we're not just looking at these isolated data points.
Right.
But, like, trying to understand how they fit into the bigger picture.
Okay. I like where this is going. So give me the theoretical rundown. Like, how do these findings fit in with what we already know about how boards work and, like, the impact of gender?
Okay, well, let's start with agency theory.
Okay.
This theory suggests that having more women on boards can actually reduce those conflicts of interest that sometimes pop up between, like, a company's management and its shareholders.
So it's not necessarily that, like, women are coming in and, like, you know, trying to shake things up.
Right.
It's more that they're bringing different perspectives.
Exactly.
Different experiences to the table.
And those diverse viewpoints can lead to greater board independence
Okay.
and better oversight of management decisions.
Right.
So, you know, they're able to ask different questions, challenge assumptions, and ultimately, like, make sure that the company is acting in the best interests of all shareholders.
Right, not just a select few.
Yeah.
Okay, that makes sense. What other theories come into play here?
Well, there's resource dependence theory, which suggests that women directors can bring valuable networks and knowledge, experience to a company, things that might not have been present before.
So it's not just about, like, filling a quota or ticking a box.
Yeah.
It's about bringing in people who can, like, genuinely contribute to the company's success.
Yeah, exactly. And that connects really well with human capital theory, which argues that women directors, they often come with this unique set of skills.
Right.
Experiences that can actually enhance a company's overall value.
Okay.
You know, things like relationship building and collaboration.
Yeah.
A different approach to problem solving. Like, these are all assets that can really benefit a company.
Yeah, it seems like these theories, at least on the surface, support the idea that gender diversity on boards is like a win-win for everyone involved.
In theory, yeah. But as we saw from this research, the reality in Spain is a little bit more complicated.
Right. Because even though these companies were seeing greater profitability with more women on their boards, investors didn't seem to value them as highly.
Yeah, exactly. That disconnect between accounting performance and market performance, it really suggests that we still have some, like, deeply ingrained biases to contend with.
And it's not just investors, right? We talked earlier about how Spain still hasn't reached that 40% target for female board representation. If, like, all signs point to diversity being beneficial, what's holding companies back?
That's the million-dollar question.
Yeah.
One factor could be the, you know, comply or explain nature of Spain's corporate governance code.
Okay.
Without any real consequences for ignoring these recommendations.
Yeah.
Companies might not feel that, like, strong push to prioritize gender diversity.
So it's more like a gentle nudge than a firm directive.
Pretty much. And then there's also, like, the pipeline problem.
Oh, right.
In Spain, there's historically been an underrepresentation of women in senior management roles, which then limits the pool of, like, qualified female candidates for board positions.
So it becomes like this self-fulfilling prophecy.
Mm-hmm.
Fewer women in leadership positions leads to fewer women being seen as qualified for these board roles, which then just, perpetuates the cycle.
Exactly. It's a systemic issue. It requires like a multi-pronged approach to address it.
This brings up a really important question then. Like, what can be done to, like, break this cycle and really unlock the potential of gender diversity on boards? Have other countries found any, like, successful strategies?
There are some promising examples out there. If we look at, countries that have achieved greater gender balance on their boards, certain patterns emerge.
Okay, I'm all ears. What are they doing differently?
One key difference is stronger legislation.
Okay.
Some countries, like Norway, have gone beyond that comply or explain model.
Yeah.
And they've actually implemented, like, mandatory quotas for female board representation.
So no more, like, strongly worded suggestion.
Right.
It's the law.
Exactly. And that can have a, pretty significant impact.
Right.
Of course, quotas alone aren't a magic bullet. You also have to address that pipeline issue.
Right.
By actively promoting women's leadership development and creating more inclusive corporate cultures.
So it's about creating this system where, women aren't just, like, invited to the table.
Right.
They're actively supported and encouraged to take on these leadership roles.
You got it. And it requires a shift in mindset, both at the individual and organizational level.
And ultimately, it's not just about hitting a specific number or percentage.
Right.
It's about creating boards that are truly diverse in their perspectives, their experiences, their approaches to decision-making.
Exactly. That's where the real magic happens.
Yeah.
When you have a group of people with different backgrounds, different ways of thinking,
right,
you're more likely to come up with, like, innovative solutions and avoid those blind spots that can lead to bad decisions.
Absolutely. That makes a lot of sense. Now, I know we've been, like, laser focused on Spain here.
Yeah.
But these themes feel incredibly relevant to companies, like, all over the world, regardless of their location or industry.
Absolutely. The push for greater gender diversity on boards, it's a global movement.
Yeah.
And the research coming out of Spain offers these really valuable insights that can be applied in all sorts of different contexts.
If you were designing a corporate board from scratch, knowing everything we've talked about, like, what balance would you aim for and why? It's like an interesting thought experiment.
It is. It's a question worth pondering, whether you're in a position to actually influence board composition right now.
Right.
Or if you're thinking about your own career trajectory.
Yeah, that's a good point. And it's something we'll continue to explore in our next segment.
Absolutely.
We'll dive deeper into the implications and these findings for companies, for investors, and, all of us who are trying to build a more equitable and successful future.
Yeah. Looking forward to it.
Stay with us. All right. Welcome back. We've been, like, really deep in this research on gender diversity, on corporate boards in Spain.
Yeah.
And I got to say, it's been pretty eye-opening for me.
It's fascinating stuff.
Yeah, we've talked about profitability, risk-taking, investor perceptions. Like, a lot to consider. But what does it all mean for our listeners?
Right.
Regardless of where they work or invest.
That's the key question, right?
Yeah.
Like, if we zoom out and look at the bigger picture here, this research really highlights that simply having women on boards, that's not enough.
Right.
It's about creating an environment where diverse perspectives are truly valued.
Right.
Where women can fully contribute their unique skills and experiences.
Yeah.
And where those contributions are actually recognized and appreciated by the market.
It's about moving beyond checking boxes.
Yeah.
And creating real meaningful change.
Absolutely.
But how do we actually get there?
Yeah.
It feels like such a massive systemic issue.
It is a complex challenge.
Yeah.
But I don't think it's insurmountable.
Okay.
One key takeaway, I think, for investors is to really examine their own potential biases.
Right.
Are they undervaluing companies simply because there are more women in leadership positions? That's a question worth asking themselves.
It really makes you wonder if some investors are, like, missing out on potentially great opportunities.
Yeah.
Because of these, like, outdated assumptions.
Absolutely.
If I were in their shoes, I'd be rethinking my strategy.
For sure. And then for companies,
Yeah.
this research really reinforces the importance of not just focusing on getting women on boards, but also fostering a truly inclusive culture where their voices are heard and their contributions are actually respected.
Because if women on boards are seen as like tokens or figureheads, that's not going to benefit anyone.
Exactly.
It has to be about like genuine inclusion and empowerment.
Absolutely. And that goes beyond just the boardroom.
Right.
It's about creating a pipeline of female talent.
Yeah.
At all levels of the organization.
Right.
Think mentorship programs, leadership development initiatives, flexible work arrangements. Like, these are all things that can make a real difference.
So it's about creating a system where women aren't just invited to the table, but they're actively encouraged and supported to lead.
Exactly. And I think this research on risk-taking adds another layer to this whole conversation.
This is where I get a little tripped up.
Okay.
If companies with more women on boards are taking on more risk, isn't that a bad thing?
Well, it depends on how you define risk and what the potential outcomes are.
Okay.
Remember, the study found that these companies were also more profitable.
Right.
So perhaps these women are making calculated risks that are paying off in the long run.
That's a really good point. It challenges that stereotype of women being inherently risk-averse.
Right. Exactly. It's not about being reckless. It's about having the confidence and the vision to make bold decisions that can drive innovation and growth.
Maybe having more women in these leadership roles encourages companies to take the kinds of risks that lead to real breakthroughs.
It's possible.
It's a fascinating thought.
It is. It suggests that diversity isn't just about fairness or representation. It's about tapping into a wider range of perspectives and approaches to problem solving, which can lead to better outcomes for everyone.
So as we wrap up this deep dive, what's the one thing you want our listeners to walk away with?
I think the key takeaway is that gender diversity on corporate boards, it's not a simple issue with easy answers.
Right.
It's complex and nuanced.
Yeah.
And it requires this multifaceted approach that addresses both the structural barriers and those underlying cultural biases that still exist out there.
It sounds like those companies that are willing to really embrace this challenge to truly foster inclusion and empower women in leadership, they might be the ones that ultimately reap the greatest rewards.
I think that's a very good point. It's something worth considering, no matter where you are in the corporate world.
Right.
Or how you think about investing.
And on that note, we'll leave you with this.
Okay.
What steps can you take within your own sphere of influence to champion gender diversity and create a more equitable and successful future?
It's a great question.
It's something for all of us to reflect on. Thanks for joining us on this deep dive.